This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Christopher Ladd, partner at NewRoad Capital Partners. NewRoad Capital Partners, LLC, headquartered in Northwest Arkansas, is an SEC-registered investment firm investing in growth equity and growth buyout opportunities in select U.S. supply chain and logistics and retail and consumer packaged goods sectors in the lower middle market. Christopher, thank you for joining us.
Yeah, thank you, Hall. Appreciate it.
Great. So what was your background before investing in early stage companies? What did you do before this?
Yeah, so I was in private equity and then in corp dev at Walmart in Northwest Arkansas. Worked at TPG Capital and KSL Capital.
Great. And so what excites you right now?
So we're focused, as you mentioned at the intro, on transportation and logistics companies. There's a lot going on in the space, given the pandemic, and a lot going on before that. A lot of the investment kind of across the board has been accelerated. We're focused on particular subsectors within transportation and logistics. So in particular, telematics, asset product visibility, warehouse automation, visibility within the warehouse, some inventory management, and then ocean and marine freight. It's a fairly large industry globally. In the States, it's about $1.5 trillion dollar business. And so, but there are pockets in there that we're focused on.
Great. So you see a lot of companies and a lot of investing. What's your advice for people investing in startups in these sectors?
Yeah, I think, much like fintech predated, logistics and transportation in terms of, dollars coming in by about 4 to 5 years. And so there's been, a big push from, small and large investment firms into transportation and logistics over the last, namely, 5-6 years. And a lot of these mass market, general plays have been funded. And so, we're seeing it quite a bit. A recommendation would be to focus on key subsectors that still have fairly large TAMs of, $1 billion, sometimes $2, $3, $4+ billion in TAM, and find, a solution or two that makes sense, and, understand that space, and then, pick a winner or two in the case of depending on how you invest. And so that's how we're approaching investing so far.
Great. And so what's your advice for people running startups in these sectors? What do you tell them to do before they go out to raise funding?
Yeah, so we do Series A, Series B. So we need to see a strong product market fit. Often we see companies jumping the gun, coming to us for Series A or Series B capital with a product that is somewhat developed, doesn't quite have a market fit, or they have a product or many products and many markets. And that scares us. A startup that is a jack of all trades has a higher probability to fail, from our viewpoints. And so my advice would be to, for us, develop the product as much as you can, and then find that product market fit. Namely, this is how we invest, not necessarily everybody, right? But we want to find Fortune 500 companies that are customers, existing customers, but also customers that we can help.
Great. Well, let's talk about the state of investing in these companies. How do you see the industry evolving from here? We're coming out of COVID and various stages of reopening, but where do you think the industry is going to go at this point?
Yeah, it'll be interesting to see. I think key question we're asking ourselves is, as the economy reopens, right, what happens to the pull forward that we've seen in e-commerce? Depending on who you talk to, some people argue it's a 3-year pull forward, some as much as, 7 to 8 years of demand. We've benefited from that in some of our companies. And so, we're spending a lot of time with our PCs to understand, not just next year's budget, but, kind of the long range plan and how they grow. And, the investments that we're looking at, whether it be in transportation logistics or CPG companies, and so that pull forward has, sharpened the focus of large companies, whether you be a shipper or retailer like Walmart, to a 3PL or a transportation logistics company, a digital solution for various parts of your operations, right? And so that could be more focus on efficiencies inside of the truck, delivery, and the operations of last mile delivery to the warehouse, right, where that product comes from, all the way through to the ship that may bring it over from another market. And so I don't know where it's headed. I think over the next 10 years, it's going to be more and more a continuation of a focus on the digitization of operations across the board. And I think there's still a lot of room to grow there.
So what do you think is the biggest change we'll see in the next, say, 5 years? You think it's going to be robotics or supply chain visibility or manufacturing reshoring? Where do you think is going to be the biggest mover?
Yeah. I think in the next 5 years, I'm not sure. You're going to see more and more automation inside of a warehouse, for example. You'll see autonomous vehicles in controlled environments, like a yard outside of a warehouse or a yard next to a port. I think, maybe 10, 15 years down the road, at least this is our viewpoint, is you'll start seeing more and more of that in more complicated settings. Mid-mile or from a warehouse to a store is more controllable. So that may be the next entry point for automation or autonomous driving, autonomous trucking. We're looking in those areas. That'll be a step change. Inside of the warehouse, the packaging, the movement of goods, the tracking of goods inside of a warehouse. I think there's going to be more and more automation there. Track and trace has been growing rapidly. We've seen a step change, as I mentioned before. A lot of the track and trace companies that we haven't made an investment in that space yet. We've been monitoring a few companies, and it's been interesting to see a Series A-ish company or a seed company, almost kind of skip over the Series A and B stage as we view it, just because of the demand from their customers. We've been watching a company that mainly deals in the automotive space, and automotive manufacturers are trying to take a lot of inventory out of their system. And so, basically skipped over what we can invest in. And they grew, 3, 4X, and we're expecting to grow, 1 to 2X. I think, from automation to autonomous driving, track and trace, I think it's one of those three.
Right. Well, let's talk about your firm. What is your investment thesis for this sector? What exactly are you looking for?
Yeah, we are, there's a number of things, right? But we look for tenured founders and C-suiters at companies that have had success prior to our investment, whether it be inside of a company, leading a division, or actually raising money and seeing an exit, a successful exit. And so most of our management teams and founders, they have 20, 30 years of experience. It's not their first rodeo, and they have a strong supporting cast underneath them. We also want that team to be coachable and open to collaboration. We manage about $175 million in our third fund. As I mentioned before, we invest in Series A and B companies. And, we don't take a highly diversified approach like some early stage investors, investment funds. And we offset that risk by heavily focusing our operational team and making sure that each company performs well. And a key question we ask ourselves is, how can we help this company grow, top line and bottom line? So we have operating partners that ran large divisions at Walmart, J.B. Hunt, General Mills, Kellogg's. Within transportation logistics, we're the former head of logistics and transportation from Walmart. Been on our team for about 3 years now, and the former SVP of IT from J.B. Hunt. And so in this vertical, transportation logistics, we work through those operating partners to source, diligence, and then, most importantly, add operational value post-investment. And so we really need to make sure that the team is there, it's coachable, they want to collaborate. We can help them grow through our network. We can drive operational efficiencies. And this is, aside from kind of all the more standard things that you look at in diligence, like market size, growth rate, margins, things of that nature. So I think those are 2 key things that we really focus on.
Great. Well, let's talk about challenges for the startup and the investor. For the ones you work with, what's the challenge you see that they face in launching and running their company?
In today's environment, it's not finding capital. I think it's finding capital that can truly help you grow. As I mentioned before, it's pairing the operational expertise with the capital. So we try to bring and we try to augment, the round that we're investing in, and then subsequent rounds with strategics that can bring some of that operational talent that we may have a gap in, for example. I think I would urge any entrepreneur to go out and try to find that capital if they can, that type of capital. Within transportation logistics, it's a slow to change industry. It has been underinvested from a technology standpoint over the last 20 years or so. So it's playing catch up, much like fintech started 10 years ago. So there's it's a slow process to form a pilot, develop a contract with a large customer, even a medium-sized customer. There's often, generational roadblocks, change of control issues, kind of your classic problems that you see at large companies. And then mentioned this before, but there's been a lot of capital coming in, and there's a lot of solutions that overlap, a lot of technologies that do similar things, claim they do similar things as well. And so proper communication with those end customers is key. We know that a Walmart, for example, or some of the groups that we're highly networked into, they take an approach, they try, 8 to 10 solutions, right? And then they pick a winner or two. Last mile delivery is a good case study. Walmart's, working with a number of customers across the US, right? And, they've been slowly whittling those partners down over time. And so clearly if, communicating your value proposition to the end customer, because there's this noise, would be another challenge that I see in the space.
Great. And then on the investor side, what's the challenge you think investors face in working in this space? Yeah,
so it's sort of the opposite end, right? It's finding the solutions that the Walmarts, within transportation logistics, right? You got the shipper and the carrier. And so understanding their market gaps and finding solutions that actually provide a cost savings or enhance revenue to some extent that are everlasting, is kind of the name of the game. For us, that's we use our network as much as anything else to really understand those problems, and then go out and source accordingly. But having that knowledge is key. Making sense of valuations in today's market is a challenge for nearly every industry, in every stage of investing. And so we struggle with this, and I think a lot of investors do, but that's a challenge for us right now. And then, as I mentioned before, one of our key investment thesis criteria is to find tenured management teams that truly understand the problem, because they were, a VP or SVP or a president of a company or division, and they operated a business, and they saw a gap in the technology offerings that they had, or the technology that third-party providers were providing them. And so, that's those are some challenges that I see.
Great. Well, you see a lot of applications and sectors out there. If you had to pick one or two to put it at the top of the list for investors to pursue in your area, what would you put there?
Yeah. So if you look at over-the-road trucking in the U.S., that's probably a couple of years ahead of marine and ocean freight across the globe. So we're spending a lot of time in marine and ocean freight tech. As a ship comes to a port, the next step is drayage. And so the movement of a container to a truck to another warehouse, and then that goes to other warehouses and eventually, feeds into the retailers, kind of the end markets. And so we see a lot of opportunity there. One of our last investments was in marine and ocean freight tech. We're looking outside of the US as well. We're looking at Europe primarily. They seem to be 2 to 3 years behind. And, there's a lot of interesting companies over there that in track and trace, in warehouse, track and trace and automation, inventory management. And they have in some cases, a solution, not just for Europe, but for the US. And so we're spending a fair amount of time there. And yeah, that's some of the areas that are top of mind for me.
Great. What's your take on blockchain? I've always thought that was a good solution for supply chain logistics. Whenever I talk to people in the space, they're almost up on the table, jumping up and down, saying, I want that. But what do you think about it from your point of view?
Yeah, we haven't spent a ton of time there. One of our operating partners, she was at JB Hunt and spent a fair amount of time on it. She's a technologist, computer scientist by background. And so talking to her, there's opportunity in contracting, or on smart contracts for sure, tracking payment flows, things like that, execution of agreements. I think, again, we haven't spent a ton of time in that because of the areas mainly the blockchain would help are quite vast. And so I think, I think it's an area that's interesting for sure. And those mainly limited to contracting and financial payments.
Okay, great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Yeah, so we invest in transportation and logistics companies, but also CPG companies as well. We're kind of looking ship to store effectively is our mandate, and I think what I'd mention to the group here is there's a lot of innovation going on, not just in transportation and logistics, but in the back of the store, for example, in-store operations. We think retail isn't going away. It'll continue to drop in percentage of retail sales, but I think it'll flatline at some point. especially with grocery, high volume consumables, pharmacy, healthcare. I think there's a lot of interest there in the convergence of retail and healthcare for us and how we invest in that from a technology perspective inside of a store like Walmart and things like that. So, there's a lot of interesting opportunities there, aside from just the products that go on the shelves, which we look at as well. So,
what's your take on turning local stores into local fulfillment centers? Do you think that's going to take off and people will use the space for that? Or do you think they'll just downsize and shrink and shift more to e-commerce?
Yeah, we've spent a fair amount of time on that. We think there is an opportunity. We started 7-8 years ago, and a lot of these technologies companies are past our investment mandate. We're looking kind of around the fringes of that for opportunities, but it's real. Stores or companies like Walmart, Target, Home Depot, right? They have a lot of fixed assets, right? On their balance sheet. They need to, the utilization of those assets has continued to drop. And so they need to repurpose those assets. So they're looking, in the back, they're looking to repurpose, parts of the store to make it more of a warehouse of sorts, to enable last mile delivery and pickup. I think Walmart is now the kind of switch on and off, but first and second largest grocery online retailer. And so they've been spending a lot of time trying to repurpose the back of their store, also the store, to be, a quasi warehouse. And I think there's just a lot of opportunity to enable that. One of the companies that was recently funded in our area has developed a set of glasses, right, that enables more efficiency for the picker. They just launched a pilot with Walmart, just got their seed funding. And so solutions like that, I think, are going to become more and more common to enable a picker. I don't think it's going anywhere anytime soon. And then, the back of the house for more core items will be there. So
cool. Well, great. Well, how best for listeners to get back in touch with you?
Yeah, LinkedIn is great. LinkedIn is great.
Cool. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Sounds good. Thank you, Paul.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.